equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
Very good, Bryce. Good to be with you once again. How are you going?
Very well as well. Always excited to talk stocks with you.
Yeah. A lot's happening. We got a lot to cover off in 15 minutes.
We do, so let's get straight into it. What do you want to cover off?
Well, should we start with the big news that reverberated across the world this week, but may not actually mean much? We have our first US $1 trillion company.
We do. Apple.
Yes.
$1 trillion. One with what? 12 zeros.
Yeah. Now, notably, not the first company valued at $1 trillion. China's state oil company was valued at $1 trillion for a brief time, and Saudi Arabia's state oil company is privately held but valued at $2 trillion. But first publicly traded US $1 trillion company.
Yeah, it's massive.
So get around Apple.
Yeah, get around Apple. For those that weren't aware, it was a bit of a race, and you did a good blog post on it about 2 months ago, Ren. It was a race to the $1 trillion valuation between Apple, Microsoft, Facebook?
Nah, not Facebook.
No,
Amazon.
Alphabet.
Yeah.
And Apple actually ran away with it in the end.
Yeah. Amazon, I think, is in the 900 billion. So, they're doing okay, but the other two are lagging behind.
The question is, will it stay there for a while now, or is it just going to touch the surface and come back under? Who knows?
Who knows? But I just want to give a quick shout out to our mate Maxim, because I had a bet that Apple would reach it by Friday, and that was the day they reached it. So good work.
That's
there.
why you're in it. That's why you're part of Equity Mates, mate.
He was convinced it wouldn't. He was adamant it wouldn't. But that's what they pay us the big bucks for.
That's right. That's why we're doing a pod and he's not.
Yeah.
Well, speaking of US stocks, Ren, we're going to bring Stake back into the conversation. For new listeners, Stake is a platform that lets you buy stocks in the US. So your Facebook, your Apple, your Amazon, and 5,000 other stocks, as well as 3,500 ETFs. They charge free brokerage, and we've partnered with them previously to bring you some cool promotions. And they are now bringing another promotion next week. The good news is, for those that had joined us on the show previously, part of the sign-up process for Stake was that you needed to put in $500 to get your account going. Now, the fantastic news is Stake have decided to drop that minimum funding to $50. So you can sign up with Stake and throw in $50 and you can be on your way. The other great point is that it's only now a $10 minimum to buy stocks. One of the great features of Stake is that they do partial purchase of shares. So if you want to get in on Amazon at the moment, their stock is about $1,800 or thereabouts. Of course, for a beginner, you're not going to have $1,800 potentially to buy a stock. So you can buy a part of an Amazon stock for as little as $10 if you want. So they're doing a pretty cool promotion, Ren.
They are. So one day only, Wednesday the 8th of August.
Yes.
Next Wednesday. So this episode comes out on Sunday, so 4 days.
Yes. Critical.
Yeah.
One day only, 24 hours, actually.
Now, if on the 8th you have signed up and you fund your account, only has to be $50 now. Stake will give you an extra $25.
Yeah.
That's a 50% return in 1 day. That's not bad. Annualize that over a year and you'll be rich.
Absolutely.
But the important thing is, if you sign up and you put money in on the 7th, you won't get the $25. If you sign up and put money in on the 9th, you won't get $25. It's 1 day and it's 1 day only.
Correct. So to clarify, that $50 minimum funding and the $10 minimum purchase is what Stake are going to be going with for the near future now, eternity. But the $25 bonus into your account when you sign up is only on the 8th. So that is critical. You must fund your account on the 8th. So for those that signed up previously through our link, and then didn't decide to fund because of the $500. Totally understandable. But now you can do it for $50 and get trading in the US, free brokerage for as little as $50. So it's very important that you use our referral code EquityMates, no space in between, just EquityMates, or you can go to our website, equitymates.com/stake. It's critical that you use those two things as well to get your $25. So as you said, Ren, put in 50, walk away with 75. You could be trading in 5 or 6 companies at $10 each. I think it's a pretty decent deal.
Yeah, I'm actually using it because obviously Berkshire Hathaway shares are, $300,000 for a Class A share, a few $100 for a Class B share. So I've been buying partial shares of Berkshire. So let's move on. One other bit of housekeeping around thought starters. If you haven't signed up, do. If you have signed up and you don't think it's coming to your inbox, check your junk mail. Apparently, some email spam filters mistakenly think that we're junk. So just check that out.
Yeah. What the hell? We're definitely not.
Yeah, I know.
Okay.
Let's do it.
That's our housekeeping. Stake and check your junk mail. Now, we are here to talk stocks today, Ren. Hardcore stocks and trading on trading.
None of these soft stocks, only hardcore stocks.
Hardcore stocks. So you put in the thought starters 2 weeks ago that the ASX are opening their trading share market game, which is a fantastic resource for anyone who wants to test some of their strategies and not lose any money, because the ASX twice a year open up a game where they give you $50,000 of pretend money, and you get to trade on the ASX just like you would in real life, obviously with a limited number of shares, but it's a fantastic way to test your knowledge and skills without the fear of losing your own money.
Yeah.
So we've signed up, Ren.
So we're putting our fake money where our mouths are, and we're going to compete against each other, I guess. Or we're both going to learn from the experience.
Yes. Yeah.
So yeah, the competition started this week.
Wednesday. Yeah. Competition started on Wednesday.
Now I am yet to put a trade on, but you've been crowing about your early successes, so we want to get into that. But I think in this episode we want to just talk about what our strategy will be. We've got 4 months, so it's not. The stake trading competition was 2 weeks, so we got a bit more time than that, but it's not that long. So obviously some strategies aren't applicable. So, you've been Mr. Successful in the first couple of days. So why don't you tell us your journey so far?
All right, Ren. Thank you. Thanks for handing me the mic and the floor. Let me take it away. No, so I just want to quickly say that the rules for the game are very simple. You get $50,000. You can only put 25% maximum into one share, so I can't put $50,000 all on one stock. As you said, Ren, it runs from August to November. And if anyone wants to play along at home and share your successes with us, that would be awesome, because we'd love to know how everyone's going. So, Ren, I started with, I thought, how can we attack this? And my first thought was the reporting season. And in the thought starters that you sent a couple of weeks ago as well, you provided us with a 2018 reporting season calendar from Commonwealth Bank that gives us some of the major stocks that are reporting over the next few weeks or so, all throughout August. And I sort of went through the list and picked out a few stocks that I think have notoriously performed well over the last few reporting seasons as my starting point.
Okay, what stocks? Or is that giving the game away?
No, absolutely not giving the game away. I also want to tie that with what I also did was I looked at sector performance over the last 12 months, FY18, because obviously they're reporting now not on half-year earnings, they're reporting full-year earnings. So I thought it would be interesting to overlay sector performance with these companies that I think do reasonably well. So just to run through that, energy over the last 12 months is up 38%, consumer staples 24%, information technology 29%, and healthcare 25%. So they're the top 4. Those that were in decline, actually, financials were down almost 4%, telco down 34%, and utilities down just on 6%. So they were already, for me, I just decided I'm not going to touch any companies that are in those sectors. What are your thoughts on that, Ren?
So I think it's an interesting strategy so far. Yeah, look, it makes a lot of sense. I think there's obvious reasons why, infrastructure interest rates are rising. Telcos, Telstra would have been a massive drag on that. Financials, obviously the Royal Commission and the banks and Australian housing. So I guess there's sort of macro reasons why all of them have been going down. Energy and mining and stuff like that have been supported by good commodity prices. So yeah, I mean, I like it so far. I guess we'll see if it was paid off in the first couple of days, I guess.
So that was my first strategy. I'll get to the actual stocks a bit later. The reason I looked at the reporting is more for a quick win. I think it's a good opportunity if you get in before the day that they report. Some cases you might be up 5 or 6% on the day that they report. In other cases you might be down as much as 5 or 6% if the market.
Or if Facebook and Twitter report, you might be down 20%.
20%. Yeah, the risks you've got to take. Hopefully the companies that I've chosen will do reasonably well when it comes to reporting time. So that was the first. The second one,
just on that, before you go on, there's probably a reporting arbitrage opportunity where, because like American companies are reporting and European companies are reporting. If you looked at like steel manufacturers overseas and you saw they had beat earnings expectations, you could probably then correlate that to steel producers or iron ore miners that are reporting later in the reporting season in other countries.
Well, that could be one of your strategies.
Yeah, it could be. It could be.
So the next one I thought about was how else can I get some cash flow coming through? And so I looked at dividends. The game actually tells you which companies are paying dividends over the next few weeks or during the game period. So I looked at those stocks and saw if there were any in there that appealed to me that were paying a reasonably good dividend yield to try and sort of cash in on dividend payments. Obviously, you need to look out for ex-dividend date because usually the stock goes down at that price on that date. So that was another strategy. I haven't bought any stocks. I don't think. I'll have to have a look based on that strategy. But what I thought.
Just to explain what the ex-dividend date is and why it goes down, the ex-dividend date is the date that if you own the share, you'll be paid the dividend. If you own it after that date, then you miss out on that dividend. So people will buy it, get the right to the dividend, and then sell it.
Yes, yeah. And then my second one, Ren, and this is the one I'm really excited to play with, is my momentum buyers, because I have been reading this book about more technical analysis side of things and buying stocks that are going up with strong volume behind them. Very contradictory to sort of what I have my previous investing strategies and thought processes have been. It's all about buying stocks when they're at their all-time highs, that sort of stuff. So I'm going to test my nerve, test my emotions with this one, and I went and found the list that is showing me all stocks that are at their 52-week highs, and you could filter that by week, month, 6-month, yearly, and I've chosen a few stocks that have been performing well over the last 1 week, 3 months, and 6 months, and are at all-time highs, and I'm going to back myself in and put some money in them to see how we go with that.
Nice.
So with that in mind, Ren, so I've got 3 strategies going on.
So this has been a long run-up, and I think now we're going to get to the good part where you tell us what the stocks actually are.
So my dividend stock, and one of the only, it's not an ETF, it's a listed investment company, is AFI, and it is Australian Foundation Investment Company Limited, and it's a listed investment company. It's at a 6-month high at the moment. It's coming off $6. It's at $6.35, and it's got a dividend payment coming up quite soon. So I've decided to buy that for the dividend. It also looks like a good stock, and it's one that I've actually had on my watch list for a number of years, and that I've bought in and out of here and there. It's a pretty stable stock. It's not going to lose me much money, and it's not going to make me a whole lot. But I'm in the green on that at the moment, up almost 1%. So that's that one. My second one that I'm doing for the momentum buy, and this could be quite controversial, but it's Afterpay.
Oh, you love this company so much.
I love Afterpay. And it's the classic, everything that I'm reading in this book is pointing towards Afterpay. We're getting institutions buying into it, volumes behind it. It's going up when the market's going down. It's at all-time highs. And it's going to be reporting in a couple of weeks' time. So I'm hoping that even though they did a market update and briefed the market on some amazing figures a couple of weeks ago, and it shot up almost 30% in 2 days, I'm hoping that there's still good news and it hits the profit that the market expects it will, and we're going to see another run up on it. So that's my other one. I'm up almost $220 on that one already.
Nice.
And then I've got Cleanaway, Ren.
Oh, don't talk to me about this company.
So it's another one that I've gone for the momentum buy, but I've also gone this one because it's just been performing really well, and I like it as a company, and I'm going to see how it goes. It's also reporting very soon, so I'm hoping that with all the hard work you've been doing at Coles, Ren, that it's going to have some good reporting.
Yeah, I'm gonna just let this one go through to the keeper. Okay, so those three stocks. Anything else?
Yeah, so those are my three stocks, each with a 10 grand in, and then I'm 20 grand in cash at the moment. So I've still got some money to play.
Right.
My strategy at the moment is I'm just going to let these run now until at least they all report. And so for some of them, I know Afterpay isn't reporting until the 23rd of August. So I've got a while to wait for them. And I'm just going to see what happens. On my watch list, I've got Domain. I think they're going to have a good reporting season based on the flurry of activity that we've seen over the last 12 months in the housing sector. And they actually were up 5% yesterday. Should have got in on them.
Oh, devastating.
Yeah, I have Costa Group on my watch list. And as you know, when Ren, we did a bit of a analysis on them. They're the ones that have the avocado and the mandarins and mushrooms.
Yeah.
They were actually up 4.5% yesterday.
Does the drought affect them?
Yeah, well, this is what's going to be interesting. The good thing is they have a lot of their facilities over in China, and they, from memory, when we did a deep dive in on them, they bought some other facilities in Central America somewhere, or South America. I can't quite remember. But yes, I would imagine it's going to be hard times for them, although they were up 4.5% yesterday, so something must be going well for them. Anyway.
There you go.
Yeah.
Interesting mix of companies. I like it.
Yeah, I have Kogan on my watch list.
Yeah, always a perennial strong performer.
Strong performer, and he's come off quite hard, down from $7. He's now in the $5 range, and he has been up 6.5% over the last 2 days. So I should have probably got in on all of these companies, but
shoulda, coulda, woulda, mate.
Exactly.
Coulda, woulda.
What else do I have? Kogan, yeah. So he's $5.13. So I'm going to watch him. He was up 5% yesterday. So it was a good day yesterday. I've got A2 Milk, but I don't know if I'm going to buy. Just interested to see. Yeah.
All the China trade stocks have been hurting recently. Bellamy's A2. So look, maybe there's an opportunity, but I think there's a lot of China risk at the moment.
Yeah, interesting. And then I've got one called Wisetech Global Limited that I've sort of come across in the last few days. It's an infotech stock. It's sitting at about $14, $15 at the moment. It's been on a great run over the last month, and it's starting to cool off a bit. It's a software company in software services, and it's getting a lot of hype at the moment. They're reporting in the later part of August, I'm pretty sure. I'll just check my notes when they're reporting. Actually, 22nd of August, day before Afterpay.
Nice.
So they could be one to watch for me as well.
Yeah. So, look, it sounds like you've done a lot more work than me, so I need to get my skates on, and maybe I'll update you where I'm going on a future episode.
I can't wait, Ren. So I'm now at 50,501 is my total.
So you've made 1%.
1.364%.
Okay, that 0.36 is crucial. No, that's good. I mean, you've come out of the blocks pretty strong in 2 days of trading.
Overall rank 264.
Oh, not bad. Who can you see number one?
Yeah, number one is at $51,538.
51. So he's already made $1,000 and a bit more than you.
$1,500, yeah.
Wow, that's a solid couple of days.
Rank number 264 out of 4,700.
Yeah, but mate, it's the easy part is getting there 2 days in. The hard part is staying there. You know?
Well, no, average player value 49,800. So the average player, 31% of people are in profit. Mate, you need to get going.
Mate, well, if you're saying that the average value is down, maybe I just hold cash.
Yeah, it doesn't count though.
Maybe I just go against all the lessons of equity, mates, and just stay in cash.
The rules of the game is you have to make a trade for the cash to count.
Oh, okay.
Yeah, because otherwise people just sit there and then...
Yeah. No, look, I'm going to get into it. I'm excited. I also want to try some of these momentum strategies that we've been talking about.
Yeah.
It's a
tough one.
It's still foreign to me. You talking about Afterpay and its momentum does my head in a little bit, because all I can think about is the credit risk of the people they're lending to, the fact that they're not regulated yet, the fact that there's so many red flags for me, and yet the stock just keeps running.
Yeah, I've got so many things to talk about with this, but let's park it because we're going to go over time. Maybe we can do a momentum episode down the track because, I've got some great stuff to talk about from this book.
And if Afterpay ever collapse, we'll do an Alec was right episode as well.
Well, all right, Ren, you need to get in. I also encourage everyone out there to jump on board and play. You don't have to have started 2 days ago. You can start whenever. There's 4 months to do this, and it's an awesome opportunity. You just need to go to the ASX website and sign up. And there are a number of players who are part of the Equity Mates bandwagon who we know are playing that we might check in with later on down the track.
And if you're beating us, flick us a message and let us know.
Yeah, because you might replace Ren on the show.
Yeah.
All right, well, that's a wrap. Remember, 8th of August for stake sign up. $50 is all you need, and they'll give you $25. Use Equity Mates, no space, as your referral code, or go to our website, equitymates.com/stake.
Put a calendar reminder in, write it on a post-it note at your computer. Do whatever you need to do. It's free money. Why wouldn't you do it?
Too right, Ren.
Yeah. Bryce has made 1% in 2 days. You could make 50% in 1 day.
Number of hours.
Yeah. All right. Anyway, until next time.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks, and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. We hate spam. It's once a week, and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.